This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm so much more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse. Unfortunately, your co-host, Bill Hamill, is not here today, but we still had a great interview nonetheless. Today we spoke with Charlie Wessel from Cordell Capital. He's an investor, a syndicator, and he's doing a great job with his investor relations role in syndications. If being an investor relations capital raiser is something you've ever had interest in, this is definitely a must listen. Really excited for today's interview. We have Charlie Wessel from Cordell Capital. Charlie, thank you for being here. Tell us how you got into the real estate industry.
Yeah, for sure, Stephen. I owned a general contracting firm for 10 years and ended up selling it. We had some rental houses. That was a real pain in the neck. So we sold those, and I was looking for some other way to get ahead. And I talked to a commercial broker here in Charleston, and he told me, he said, "Man, look, go dig into some multifamily real estate." He said, "I don't even sell it, but I'll invest with you if you get a good deal." So that's what we did. I went and just studied, I looked it up that night, and that was in 2017. And I studied it for about a year before we did anything. And I just wanted to make sure I could, I knew what the hell I was doing before I went and got my friends and family's money involved. And yeah, now here we are.
That's great. Charleston's had a good 5-year run since 2017. And obviously, you knew about real estate after having a GC career. But once you started studying multifamily, seeing the little nuances in that industry, what was your first step? How did you get started with multifamily investing?
Well, I signed up for a course on how to do it. And even though it was very high level, it still was very informational. It didn't cost a ton of money. I think it was Michael Blanc's course back in like 2017. I'm sure it's updated and way more thorough now, but it was good. It was good, and it gets the gist across. And after that, I just started going to some different you know meetups, and I went to some seminars and stuff like that, and I just dove in, man, head first. And I say I dove in head first. I dove into educating myself head first. I didn't just run out and start looking for deals. I really wanted to make sure we knew what we were doing. But yeah, and then I met some people at a conference and ended up teaming up with them and raised some capital for them. And then we started looking for our own deals. We did that for like a year and a half, and that was a bust. Um, I mean, we got in the best and final in a handful. We got awarded one, and it fell apart in due diligence. And I just threw my hands up. And I was like, all right, well, I'm done with this. I'm not going to go look. All these people that I know are out finding deals because they've already got, 1,000 units under their belt. I said, so I'm just going to go team up with them, raise some capital, and we've been doing it ever since. Just raising capital for good buddies.
That's
deals.
great. The person that first inspired me into multifamily real estate investing laid it out saying that you need to have inspiration and then knowledge and then take action. It sounds like that's the path you took there. Yet you have to educate yourself and then act on that education. So you're in Charleston, South Carolina. It's an expensive market. It'd be impressive for someone to be collecting 1, 2, 3 units in an area like that. But it sounds like you're going after larger assets. You're looking to scale quickly. Was that the plan here? Once you went to that camp, you started going to these seminars, you wanted to start getting into these large deals?
Yeah, I don't do anything quickly. So I do, we have to jump now. We move pretty quickly when a deal comes along, but it's taken us a long time to get set up to be able to do that. with different processes and active campaign and all the content that we push out there. It's taken us years to get all this stuff together. Even though we've been plugging away the whole time, and we're still don't have it perfected by any means. But yeah, we're closing on 300 units in Houston this Friday, and we have another opportunity that's under contract as well. And like I said, we partner with the deal sponsors, and um, we do take an active role in our side of the GP. That way we stay compliant for SEC purposes and stuff like that. I mean, we make sure everything we do here is super legit because I don't ever want it to get messed up. So, yeah, I mean, like I said, we get a piece of the GP for bringing capital to the table. We're actively involved in the investor relations part. We fly out to the properties several times, meet with the property managers. The team we're with now, that we're partnering with now here for the last few deals, they're vertically integrated, so they have their own property management company. They specifically just focus on one area, one market, one MSA in that market particularly. And that's just something that I really find very conservative. They're not spread out all over the map. They have, all 12 of their apartment complexes are in one MSA. They're all 100 plus units. They just engross themselves in the market and they know what they're doing. They're sharp. They're young. I mean, they're in their mid-20s, man, and they are crushing it. They're in their mid-20s and they're crushing.
That's great. For
They're
anyone listening that doesn't fully understand what Charlie's talking about, he's using a syndication model here to take down larger assets, being a GP by raising capital and keeping an active investor relations role in that deal. Is Houston the main market that you've been looking into for Cordell Capital?
It is right now. That's what we're focusing on right now, partnering up with this other sponsor that just focuses
Was it
on Houston.
you picked Houston or you met the right person?
Now, I met the right person. You always bet on the jockey. Dude.
Absolutely.
It's never the horse.
So, or the trainer. But speaking long term here, is Houston the only market that you are interested in, or if you meet the right sponsor, are you willing to expand?
No, yeah, we brought capital to a deal in Des Moines, Iowa, of all places. But that particular sponsor, he really specifically focuses in on his certain area as well. And Des Moines is only about an hour and a half outside of his area. So he's in St. Louis. And so, they have their company vertically integrated as well. I just like that. I like it when sponsors have control. They have control over the business plan, the people that are behind the helm. They know who's running the ship. They hired them. So they have their own property management company. I wouldn't want my own property management company in a million years. If somebody gave me a property management company, I would quickly give it back. But the fact that they do gives me and my investors a lot of comfort knowing that they have that level of control.
Yeah, property management can be a rough business. I'm self-managing 35 of my units right now, and it's not easy, even something that small of a scale.
Nah, you're just
Absolutely.
a punching bag.
A thankless job.
That's all you are. Yeah. So when's the last time a tenant called you and said, "Hey, man, I appreciate
it's been a while.
taking my rent
Yeah.
this month"? Yeah. I don't think it's ever happened. I don't think it's.
I used to be a soccer ref. That felt the same way.
Oh yeah, trust me. My 12-year-old plays travel soccer, so we give you boys hell for sure.
So what exactly are your investors looking for? I'm sure you're having these conversations with people that you know, like, and trust. What are they telling you that they're looking for out there as far as investments, especially in a market like what we're seeing right now?
safety. You know, they're looking for conservative plays. Um, you know, everybody in this game preaches cash flow, but none of my guys are looking for cash flow. As a matter of fact, they'd rather just leave it all in and just get it after three. Because I mean, you know, we're going on 3-year plays right now. So yeah, most of our guys would just rather leave it in. They don't need it. Um, so you know, they're looking for a conservative place to put their money. And back, you know what? You can still be conservative, and we can still have a projected 18% average annual return. I mean, that whips the pants off of any, you know, investment that your money manager can bring to you.
Absolutely, I agree. We see the same thing in our syndications. Tell us about how you get that 18% return with conservative underwriting.
Well, it has to do with, you know, I mean, our cash on cash obviously now has gone down because of the higher interest rates. I mean, that's really cut into the cash on cash business. So you're looking at, you know, 6.5, 7% cash on cash. Whereas in 2018, I mean, you could get 12% cash on cash. I mean, it was, you know, cash flow was huge. Cash flow was big. And especially 2019, I mean, you know, you could get some pretty decent cash flow. But now with interest rates rising, it kind of cuts your cash flow. We're kind of seeing how we're going from some of them are going from like a 70-30 split, GP to LP split, to like a, you know, even 80-20, which back in 2017, that was kind of the norm. And then general partners kind of woke up some and was like, hey, look, we can make more money. You know, I mean, we're providing an awesome service to these investors. Why should we not prosper from that? You know, I mean, honestly, because I guarantee all your guys at, you know, Edward Jones or Prudential, they're prospering quite handsomely from what they do. We don't do bad, but anyways, so with the, you know, the conservative outlook on it is, you know, we're not taking our exit cap to anywhere crazy. I mean, we're going a half a point maybe from where it is now. It's, you know, we just got to make sure that we're looking ahead to the future and safeguarding that. And that's another thing with these guys focusing in on these markets, like you guys. I mean, you guys are focused in on Tampa, Florida, and
Capital
wherever it
District of
was
New
in New
York.
York.
It's easily
You know,
forgettable.
you guys have those.
The Capital District of
What
New
is it?
York. Easily forgettable.
Oh, okay. Well, there you go. Yeah, yeah. So if you, you know, I mean, if you engross yourself in those two markets, then you get to know everybody in those markets. You know, with our operator who focuses in on Houston, I mean, the deal that we have under contract now that we just started raising for last week, it's he got it off market. He first turned in his LOI on this property a year and a half ago. And they just couldn't nobody could make it work. And so finally the owners of it contacted him and said, we'll take it. Let's go. And he was like, okay. So he got it at a discounted rate, you know, because he knows everybody in the market and they know that he can close.
Yeah, it's a great point. Every multifamily deal I've done has been off market through someone we know in a market that we focus on networking in. If you try and do that across the map, it's not going to work out the same way as focusing on brokers and owners in one specific market.
It's really not. And you got these sponsors who will have, you know, 3 in, say, Tampa, 3 in Tampa, 2 in Atlanta, 3 in, you know, Dallas, Fort Worth, 1 in Denver. And I'm like, dude, there's no way you can keep up with all that. I mean, you just, you know, you have got to have a massive team to run that
Absolutely.
kind of business. And that's not what we're looking for, you know? I mean, dude, we're looking to keep it simple, stupid. We're looking to keep it small, keep it personal, especially with our investors, and just make sure we do a good deal.
I'm sold. So you said that you were a GC first. How does that play into you being an active capital raiser in the syndication market? Because you're not very hands-on day to day. You don't want to be the property manager, but you have that construction knowledge. Does that get into your head a little bit when you see sponsors doing things? Do you want to be there overseeing them at all?
Yeah, yeah, because even though I don't manage properties or I'm not the asset manager, I mean, I'm sitting here in my office. My office is 30 minutes from my house. I sit here in my office every day, well, except for Fridays. I play golf on Fridays. But Monday through Thursday, I'm right here. I work. Last night, I worked until 6:30 or 7 o'clock. Um, so I am, we're working our tails off for our investors, trying to get them all the information they need to make a good, educated decision on the investments that we put out there. So yeah, I don't even know what the question was or where I was going with
Just as
that.
far as your
But yeah,
construction background, does that affect your decision making and your day to day, your thought process as a sponsor, as a capital raiser in these deals?
it does because it makes me dive into the weeds because that's where the money's won or lost. Especially as a general contractor. I mean, you start throwing a bunch of change orders out and you're not going to get any more jobs from these guys. And we always look for repeat business. Like I never was kind of a one-off contractor. We always went after, guys that own multiple buildings here in Charleston. We were like an interior upfit contractor, like for commercial properties. So we would go after property management companies. We were always going after somebody that had more than one job. You know what I mean? Like once I contacted somebody, I knew that I could get 10 different jobs out of this guy over the next 5 years, at least. So, yeah, I mean, you got to dig into the weeds. And I get that from being a general contractor, paying attention to
Yeah, it's just
details.
business. Uh, uh, As far as the Charleston market goes, it's a market that I've considered a lot because it's right in between the two that we focus on. Is that something that you
Yeah.
have thought about investing into the Charleston? Are you looking for the right sponsor, or what's your thoughts on that?
You can invest here if you like negative cash flow. Yeah. If you like two caps on your buildings, then
And
come
you don't
buy a
see that
building in
changing at all in the
Charleston.
future?
Not really. No, not here in
Yeah,
Charleston. It's crazy expensive in Charleston, and we got all you boys from New York moving
the
down
only
here
way
in
I think you can make it
droves.
work would be a short-term rental. That's why I do short-term in Tampa because there's no other way to make a cash flow with multifamily.
Oh, yeah, yeah. You can do short term rentals here. The only thing is they really put a restriction on it here in Charleston. They really, I mean, in Mount Pleasant, I got a buddy of mine who's got a slew of what could be really good short term rentals, and he's on the list, but he's been on the list for 2 years because I mean they don't just hand it out. I mean, there's a finite amount of short term rental permits that they give out. And Charleston's full of the good old boy system, man. You down south, man. This is
Yep.
who knows
Yep.
who, you
So
know?
it's a waiting list to get a short-term rental permit. Okay.
Oh yeah. Oh yeah. Yeah, like I said, he's been on
Hmm.
there for 2 years. And he's got quite a bit of properties over there that could be really fantastic short term rentals that he's just having
I
to
don't
do
see that
long term
loosening up
rentals on.
anytime in the near future.
No.
So what's next for Cordell Capital? We're in a tough market time right now. Rates are up. It seems like everything's been going well for you guys. What do you see in the near future?
We just keep throwing coal into the fire here, man. I mean, we're just plugging along, really. It's just keep plugging along, keep doing what you're doing every day, and I promise you, it
Get
pays
that
off.
get
in
Get
the
that
end.
ball 1
I
yard
mean,
down the
the
field.
first deal we did, we yeah, exactly. Just keep driving, keep your nose down, keep driving, go, go, go. Because I mean, the first deal we had, I mean, I'm a member of the country club, and I was like, oh, this is going to be a breeze, man. This ain't going to be hard at all. Well, everybody knew Charlie as the general contractor, not as their you know retirement money man. So it took a while to overcome that, and the first deal we got, I told the guys, I was like, yeah, no, we can probably raise $500,000, no problem. I mean, I was so embarrassed. We brought in two investors. One guy brought in 100 grand, and another guy brought in 50 grand. So we brought in 150 grand to a deal, and I was like, okay, this is going to be a lot harder than I thought. But I'm used to hard work, so we
I
keep
remember going
grinding.
through the same process on my first syndication. I remember at the local country club, I thought it'd be so easy to raise 500,000, and I came up a little short, and I had to go to Bill, my partner on the deal, and say, "Hey, I think I need a little help on the investor relations part here, because it's not easy to raise money at that amount. Even though you know it's a great deal, you know it's better than what else is out there as far as investment opportunities. You still need that know, like, and trust. And when you're first starting out, it's really hard to get that trust factor with money in that high of amounts. You mentioned being on Active Campaign. That's a database that we use as well. What's your process for adding people to your database, staying in touch with them?
I mean, we send out emails a couple times a month if we don't have a deal going on. We only do one deal at a time. So we're, like I said, man, slow and steady. We're the tortoise here, and we will win the race. But it's, we send out a couple of emails a month. Now, if we have an opportunity, an investment opportunity, we probably go overboard, but I don't really care. It's just, get it out. Let's get it out. Let's get it out. We have a webinar today at 2 o'clock. So we started raising for this opportunity last week, like at the beginning of last week, and our webinar is today. And we close it on the 22nd. So I mean, what you got there? 3 weeks to raise
Yep.
capital. So we pump it out there, man. And you know what? That's fine. If somebody doesn't want to see it and they unsubscribe, good, go away. We're looking for people that are
Yeah, when you have
serious
a
here.
good one, you do have to over market it a little bit just to get that point across.
Yeah, and I mean today we sent out a text message this morning that'll go out that went out at 9 o'clock this morning saying, hey, there's don't forget about the webinar today at 2 o'clock. And then at 1 o'clock p.m., another text message will go out saying, hey guys, 1 hour until the webinar begins. And it's got a link and
Doing
everything
it the
in
right
it.
way.
So
On your current deals, are you doing quarterly investor calls?
no, we don't do investor calls at all unless
So do you
somebody
just
wants
upload
one.
the financials to a
I mean, we
portal or
send
send
out
them out individually?
yeah. We upload them to a portal, and we also send out a monthly email for each
Okay, so the
opportunity
monthly
we
email
have.
is going to include financials, maybe some pictures and basic updates. I like it.
Absolutely.
I do the investor relations part too, so I always try and get a feel of what other people are doing, see what works.
I think an investor call would be good to do. I haven't had a sponsor that I've linked up with yet that was super thrilled about it, but um, I mean that's why I'm here though. Is to really push the envelope on the investor relations part. They just need to focus on running the asset. But yeah, I think an investor call would be a good thing to do. We just haven't done it. We've never done it. I mean, we send out emails, once a month, and that's been sufficient,
Yeah, I've
I
heard a
think.
lot of mixed opinions on it. One take is that you don't want investors seeing other investors, and a lot of conference calls. They're going to have access to that, so you have to hide the names. There's a lot of privacy involved with stuff like that.
Yeah, but that's all
Yeah,
easy to do with Zoom.
Yep,
That's
yep.
all easy to do.
And then as far as taking questions, I think taking those questions is a good thing. If they have questions and they want that opportunity to ask them, it's a great place to do it.
Yeah, absolutely.
Well, it seems like we're
Absolutely.
doing a lot of the same things here. Definitely a good conversation about capital raising for syndications. Charlie, this is the Collecting Real Estate podcast. So to wrap it up, we ask three questions because they say you need three of something to have a collection. The first question is, what's the most important thing you've learned in 5 words or less since you started collecting real estate?
Um, like I said, man, keep working, keep going. It's it doesn't have to be perfect. Just keep going. Put something out. Doesn't have to be perfect. Just
Consistency
put it out.
beats perfection. I like it. Number two,
Absolutely, 100%.
what are your 1 to 2 year personal goals outside of real estate?
Well, I got twin 9-year-olds, 9-year-old girls, and a 12-year-old son. Actually, he just turned 13 last week, and just to spend as much time with them as possible. It really, really. I mean, I went and played golf with one of the kids last night, and we had a blast. Um, just to spend as much time with them as possible, and to really provide a quality service to our
That's
investors.
great. I was expecting a club championship to be the immediate answer, but I like the family time. Number
Yeah, right.
no,
No, I'm not that good. I play way too
okay,
much to be as bad as
understood.
I am.
Number three, where can the listeners contact you, and how can we assist you?
They can go to cordellcapital.com or yeah, we're all over LinkedIn, Facebook, Charlie Wessel, Wessel. Cordell has two L's, Cordell Capital. Um, same as you, bud. We're all looking for capital out there. The more capital we have, the easier it is to close deals.
Great. We'll put all that in the show notes. Charlie, thank you for being on the show. It was a great episode.
Thanks,
You too.
Steven. Take care. Have a great one.